Hello, everyone, and welcome back. As always, we're grateful and blessed that you have joined us today. I'm your host, and I am Ben, the Tax Pro. I'm an enrolled agent licensed by the Internal Revenue Service, and today we're talking about what many financial professionals consider to be one of the best retirement vehicles, which is the Roth IRA or the Roth IRA, wherever you want to refer to it. If you ever wondered what a Roth IRA is, why people love it, whether it's better than your 401k or if you qualify, this is the video for you. Let's jump right in. What is a Roth IRA? A Roth IRA is an individual retirement account that you open yourself. It isn't tied to your employer. You contribute money you've already paid taxes on, so they're after-taxed money. You invest those funds, and if you meet the IRS rules for qualified withdrawals, both your investment growth and your withdrawals can generally be tax-free. The biggest advantage, imagine investing money for 20 or 30 years and potentially never paying federal income tax on those qualified gains or earnings. That is incredibly powerful. How do you open one? Opening a Roth IRA is usually very simple, especially in today's age with technology. You can open one from your cell phone. You can typically open one online through many major financial institutions and brokerages, or even your local credit union. Once your account is open, you simply transfer money from your checking account or your savings account, and you put the money into your Roth IRA. Some people contribute monthly, some people contribute with their tax bill. They send off their federal and their state taxes, and they send off their Roth IRA. Other people do it every other year, and some people just do it maybe when they get an inheritance or something else. But here's a big mistake that all beginners make. They put the money into a Roth IRA, but they never actually invest it. So they don't utilize the tax-free gains that you can get with qualified withdrawals. Remember, opening the account is only step one. Generally, you'll also need to choose an investment portfolio that you're comfortable with, and you'll need to put your Roth IRA funds into that account or tied to that index or mutual fund. Many investors choose diversified mutual funds or ETFs, but your investment should always match your goals, your comfort level, your financial IQ, and your tolerance. Risk tolerance, I apologize. Why is the Roth IRA so popular? First, tax-free qualified withdrawals. Unlike many traditional retirement accounts, qualified Roth IRAs offer withdrawals that are generally tax-free. There is exceptions. That means your original contributions and potentially decades of investment growth and gains may never be taxed again federally. Second, you have much more control than a 401k. Since you own the account, you're generally free to choose where it's held and how it's invested. Unlike a 401k, which your employer can deal with a big conglomerate, can be indexed, you're not limited to only the investment choices of your employer and the bulk investment that they do at your work. Third, no required minimum distributions during your lifetime. Current federal law generally doesn't require original Roth IRA owners to begin taking RMDs, required minimum distributions, during their lifetime. That allows your investments to continue growing if you don't need the money right away. What are the downsides? Nothing is perfect. The biggest disadvantage is the Roth IRA contributions generally are not tax deductible. Let's compare. Example, suppose you invest $10,000 into a traditional retirement account. You may receive a tax deduction today for the money that you put into that account. It'll come off your taxable income for that year. But you generally pay taxes when you withdraw the money in retirement, and you're also going to pay taxes on the gains. With a Roth IRA, you don't receive the deduction today. It's after-tax money you're putting in this account. But qualified withdrawals later may be completely tax-free, including gains. Would you rather receive a smaller tax benefit today or potentially avoid taxes on decades of investment growth? That's up to your appetite and how you feel about your money. For many people, that's why the Roth IRA is so attractive. Can you have both a 401k and a Roth IRA? Absolutely. Many Americans contribute to both. If your employer offers a 401k, you may still qualify to contribute to a Roth IRA depending on your income and the IRS contribution rules. I highly advise you to contact a tax attorney or a tax pro like myself when making these decisions. One account doesn't automatically eliminate the other. Which should you fund first if you had to choose, traditional retirement or a Roth? Here's my general rule that I tell all my clients. If your employer offers a 401k match, put 5 in, they give you 5. Contribute enough to receive the full employer match first. This is most beneficial and best practices. Why? Because that's essentially free retirement money. You double in your money. If your employer matches 50% of your contribution, every $100 you invest, you can immediately become $150. That's not double, but that's 50%, so every dollar turns into $1.50 immediately. That's hard to beat, even with a great retirement plan, investment plan. Once you receive the full employer match, many people then consider funding a Roth IRA if they're eligible. Everyone's situation is different, so it's always smart to discuss retirement planning with a qualified tax professional or financial advisor. There's a ton of little rules with thresholds and ceilings and all kinds of stuff. Who can contribute? The IRS places annual contribution limits and income limits on Roth IRAs. If your income is too high, you may not be able to contribute directly. Those limits change periodically with the Congress as they set new laws every year and periodically change. So always verify the current IRS rules before contributing. Bonus topic, what is a backdoor IRA? Before we finish, one of my favorite hidden tools that a lot of people still know about. Let's talk about something called the Backdoor Roth IRA. If your income is too high to make a direct Roth IRA contribution, there may still be another option. A backdoor Roth IRA generally involves making a contribution to a traditional IRA and then converting those funds to a Roth IRA. However, this strategy comes with some important tax rules. You need to be very careful while you do it and not make decisions. It needs to be well planned out. One of the biggest is called the pro rata rule or the prorated rule, which can create unexpected taxable income if you already own pre-taxed IRA assets. You can't commingle the funds. Because of those rules, this strategy should only be considered after understanding the tax consequences or speaking with a qualified tax professional. So if you do a backdoor Roth IRA and you mix it with a regular IRA, you can make the whole fund completely pointless and a big waste of your time. And you'll also lose a bunch of money. So, final thoughts. A Roth IRA isn't the perfect retirement account for everyone, but for millions of Americans, it can be one of the most powerful long-term wealth-building tools available. And it's a great product and a great investment, and it's a great vehicle depending on your wants and needs. The earlier you start investing, the more money you're gonna have when you retire. The more time your money has to grow and to multiply and to give you the best retirement you could ever dream of. Good tax planning isn't just about saving money this year, it's about a long-term plan with incremental investments. It's about making smart financial decisions that can benefit you for decades. If you're unsure or curious whether a Roth IRA is right for you, schedule a free consultation with Ben the Tax Pro or another qualified tax professional who can review your specific financial situation. Below you'll see a link for NPS Tax Solutions to go ahead and get a free consultation if you'd like. Here on Ben the Tax Pro, we teach real-world tax strategies, retirement planning, IRS updates, and financial education to help you keep your hard-earned money. I want you to know everything I talk to you about I use in my daily practice with my clients, and I only tell you things that I see that are beneficial and create a higher quality of life for my clients and hopefully for you too. Again, I'm Ben the Tax Pro. As always, we are grateful and blessed that you joined us today, and we will see you in the next video. Thanks for spending some time with us today, and I appreciate you.